CommitToWealth.com, creating a legacy by committing to real estate wealth.
Welcome back to another episode of the Commit to Wealth podcast. I'm your host, Juan Vargas. With us today, we have Yoshi Asano. A little bit about Yoshi. Yoshi has over 14 years of commercial real estate investment experience and has been actively involved in the acquisition of nearly 900 multifamily units with an asset value of over 100 million. So that's a brief intro, but we have Yoshi here. So welcome to the show, Yoshi.
Hey, thank you, Juan. Thank you for having me on the show. Really appreciate it, and I'm very excited about on your show.
Yeah, man. It's a pleasure to have you on. So, like I said, I'll give you a brief intro. So, it didn't do you any justice there. So, I want you to go ahead and tell us a little bit about your background. Tell us where you came from. Where you're based, and tell us who is Yoshi Asano. Okay.
Yeah, sounds good. Yeah. So, I born and raised in Japan, and I moved to California when I was 19. And I had I had fun in California for first couple of years. I went to college there and then got a job over there. And the job was to manufacture and sell building equipment. So I was in construction business, and my clients are investors. My clients are multifamily or any commercial building investors, commercial, real estate investors, basically. And I decided to invest into the real estate after reading Rich Dad Poor Dad. That was the first book I read regarding investments related to the real estate. And I decided the real estate is a vehicle to build my wealth, right? And one time I was in the business development for that company, and I went to see one of the building owner in LA. And he owns a 15 or 20 units multifamily there. It's like a beach, I can't remember, maybe Manhattan Beach or Redondo Beach, somewhere there. Okay. There's a lot of 10, 20, 30 units apartments there, 60s, 70s vintage. So he's one of the owner. He wanted to see boiler system. So I go up there, try to pitch my boiler system. And he showed up, right? He showed up with the flip-flop shorts and the Tommy Bahama shirts, right? And I was shocked because, all the business meetings I've been there, people usually wear dress shirts and slacks and black, leather shoes and stuff like that. And he showed up very casual. And I was like, man, that's what I want to do, right? So I started to ask questions. And he said he used to be a policeman in LA, wow. LAPD.
Interesting.
Yeah, and he knew this, fourplex, and he knew the tenants there because he was a drug, dealer house, basically. So he got a bargain on the fourplex, and he purchased this fourplex with knowing that what kind of tenants he has and knowing that how he can handle those tenants, right? Because he was a policeman.
For sure.
Yeah. So he that's his first of career in real estate investments, and he never looked back since then. And now back then, when I was talking to him, it was more than 10 years ago, right, in LA. He said he was on the way to Caribbean, and I was asking, what are you doing there? And he was doing resorts developments in Caribbean island. It's a hotel, hotel resort developments. So he never looked back. Very first deal was fourplex, but he just kept going, grew to that point where he can do resorts developments in Caribbean, right? So I was like, oh man, I'm definitely in a different side of the business. I'm in the real estate kind of, construction business, and I've been talking to all these investors, and I'm just wrong side of business. And it just a click, right? That moment, it just in my mind, it's click with the Robert Kiyosaki, Rich and Poor Dad, and real Rich Dad in front of me talking about the how he get into the real estate and stuff like that. So that's how I kind of get into the commercial real estate investments in California.
That was your motivation right there. Just seeing somebody else, take action, and seeing somebody else that just another guy, kind of like maybe you or I are, and but he took action. I mean, he was a policeman, he was a policeman, and so it just goes to show that, I'm not saying nothing wrong about policemen. I actually wanted to be a policeman one day as well. It just shows you that no matter what position you are and what career you're in, that if you really educate yourself well enough and you really have the drive, then you can get into real estate. You can get into multifamily. You can start off, with the fourplex, and then go into development later on. Which is what he did. So that's very amazing. That's a very cool story. Actually, very inspiring as well.
Yeah. So I started the commercial real estate investments. It was actually JB with the ex-father-in-law. He was in the real estate business, so it was good kind of match for me to go after him and ask him to join his gig, right? So land bankings and commercial renovation projects and stuff like that in California. But I want to be independent. I wanted to be my own kind of investor, right? So I started looking into the multifamily, and it was tough back in 2005, 2006. All these deals in California were overpriced, and I was looking at the Phoenix, and I didn't pull the trigger. And then a couple of years later, I knew that the price is way over high, and sure enough, right? The market crashed. And I waited a couple more years until the market started to recover. And then 2000, maybe 10, 11, that's when I started looking into multifamily again and decided to buy deals in Texas after research different markets, right? I was researching like a landlord-friendly, business-friendly, strong markets, right? And it was like Phoenix, I was looking at the Denvers too. I was looking at all these cities in Texas, Atlanta's, a couple of cities in Florida, and Texas seems to be like very, very attractive to me. So I decided to invest into Texas, and then looking into Texas deal, and start making an offer from California. But it was kind of tough for me, because I don't have much knowledge, and also it's just a remote location, so it was hard for me to develop the relationship in a local team, stuff like that. Sure. So I decided to move to Texas just to get into the multifamily business.
Oh wow! So you actually that was one of your reasons why you decided to move to Texas. Yeah, was to get into multifamily or get into real estate. That was one of the reasons.
Right. Yeah.
That's crazy. That's crazy because that's another very interesting fact that not a lot of people are willing to make that drastic change in their life. Just to follow, some sort of, path or some sort of ambition that they have, or goals, like you had, for example. But that's very interesting. So go ahead and continue. Yeah.
Yeah. So thanks to my wife, right? When I talk about my wife, hey, let's move to Dallas, and she didn't say no. So that was
that was easy.
That was a good one. She actually wanted to say, okay, let's go, let's do it. If you want to do something, I'll support you. Let's go. Let's move it. So that was kind of her attitude. So I'm still thankful that she made a decision that follow me to Texas. So I get into the multifamily, and I kind of followed this policeman, right? I bought the fourplex in Fort Worth. That was the very first deal I bought in 2012, and quickly realized it's hard to scale by myself. And I didn't know syndication scheme or syndication structure back then. So I kind of started doing more research and found out there's a way to buy deals with other investors, right? That's the syndication. So I educate myself. I invest myself for the education side of it, both financially and the time, right? And I got educated, and I started to look for a first syndication deal in 2014. And in 2015, I got the first syndication deal in Fort Worth. So I got the two deals in Fort Worth. That's 89 units. That deal did pretty good. I'm actually under contract, and this deal have done 2 cycles so far.
You're in a contract to sell it. You're in a contract to sell it, right? Because you acquired it in 2015? Okay.
Yeah, 2015. And then I actually refi this deal in 2017, and I had the 100% cash out for myself and for all the investors. So we don't have any skin in the game right now, and we kept another 2 years from 2017 to 2019. And the good thing is that when we refi, we were able to get pretty good loan proceed. Top of that, we have interest only and lower interest rate than previous finance. So we were able to keep the same level of cash flow. It's almost 10% cash on cash. If you consider the initial investment is still in the deal, and it's 10% cash on cash.
Amazing.
Even it's infinite returns because it's there's nothing.
Yeah, you have no more cash in the deal.
Yeah.
That's amazing. And I've heard of guys doing these type of deals, and there's a local guy here that's out of Houston. He's done a few of these as well, but not everybody is not everybody's plan to do a refi, right? For most people, it's you improve the value of a property, and this is I'm speaking syndication model here, because it'll be a different model. Maybe if you are planning to hold it, if you buy it as a JV type of deal, you may be holding it for a little bit longer. But in your case, it was syndicated, and after a couple of years, you were able to do a refi, pull out 100% of the equity. So everybody's cash is back out of the deal. They have no cash in the deal, and you can stay in the deal for another 2 years, still maintain a strong level of cash flow, which is 100% infinite return. So that's amazing. Those type of deals are I would say they're harder to come by, and they're harder to execute as well, right?
Yeah. So I consider this is a 2 cycle. So capital events is 1 cycle, and the exit is another cycle, right? So we were able to enjoy 2 cycles without actually finding another deals, negotiating another deals, closing another deals, and deal with another property management. We don't have to do any of that. We just kept it same deal, and then we did the 2 cycles. Now we're selling, and we're gonna have a pretty good cash out again. Because we have since 2017 this deal appreciated pretty good also. This is a great deal, and since then I've been doing multifamily, not only the syndication structures, but the kind of like a JV structure with the family offices in Japan. So total, like you mentioned, about 900 units under my management, and about $100 million in asset value today. So most of the deal is in DFW, and recent transaction actually, Juan, myself and a few other partners actually just got the deal closed in Phoenix about a month ago, right? So that was the latest acquisition for me with Juan Yu, and that's $16.7 million purchase price and 236 units. And it's heart of Phoenix, just the city of Phoenix, just north of Phoenix downtown, close to Midtown. So we are very, very excited about this deal.
So tell us a little bit more about this deal. Now that you bring this one up, in Phoenix, what was, how was the deal, found? Was it off market? Was it on market? Tell us about the, what your vision is for the property. How it is currently. What do you plan to do with the property moving forward?
Okay, yeah, sure. So Juan actually was the the key person to find the deal, right? But the broker listed for this deal was actually not the fully concentrated and focused on multifamily space, right? This broker is doing like industrial, commercial, offices, and also the multifamily. So this seller actually reached out to the one of the retail broker, and they couldn't list it, so they handed to this broker, who is probably more towards to the office industrial type of broker, happens to also have a listing for the multifamily. So their marketing hasn't been very strong. So for me, they couldn't reach out to the full multifamily investors, right? Even though it was on the some of the online online platforms, stuff like that, not much people knew about this deal. So it was kind of on markets from the brokers standpoint, but for us it's more like off markets. It's almost like treated as an off market deal, because not much people know about it. It was much less competition when we negotiated. There was another buyer that competed against us, but that's about it. If deal like this in Phoenix or Dallas or any major markets, you should have like a 20 offers, and then you should have like 3 or 4 best and final, and we all compete each other, but we didn't have that competitions. So that's very was fortunate that we were able to secure this deal.
Awesome. So tell us about the business plans. What do you plan to do with the property? How is it now? What do you plan to do with the property? Tell us maybe like the vintage. Tell us a little bit more about your vision. And then we also I also would like to bring up maybe some of the debt. Talk about the debt. And what your terms were and those kind of things. Just get an idea of what kind of asset this is.
Yeah, absolutely. It's built in 70s, but it's very solid structure. Physical characteristic of the buildings, it's all block wall, 100%. So it's a very strong. It's not. There's no Hardys. There's no wood. There's not even the small brick. It's just a big block building. So it's a very solid buildings. Even though it's built in 71, I think that it's going to last another 200 years. Type of buildings. And the location-wise, it's a gentrification area. It's in the edge of the Midtown, and the Midtown is an up-and-coming area in the Phoenix markets. It's kind of like uptown in Dallas market, if you guys are familiar with the Dallas markets. Any cities, there's a downtown, and there's another parts of town that it's up-and-coming with the new offices, new retails, and stuff like that. And the Midtown is one of those spots for the Phoenix. And this property is located actually, technically it's in the Midtown, even though it's away from the central location of the Midtown. It's still within the Midtown kind of district. So used to be rough, but yeah, it's getting better and better, and it's transforming. Luckily, I think it's luckily the previous owner owned this deal for like 14, 15 years. So they purchased it a long time ago at a very low price. And they didn't have to do any capex or improvements into the property, as long as they have some sort of tenants in the correct rent, right? So they kind of treat as ATM machines. So there's no capex into it, and the tenant demographics is very low right now. So it's a kind of, in a way, it's a cash flow deal. It's high 90% occupancy, and it's cash flowing well. But in terms of the demographics, it's kind of distressed the property management side of it, because there's a lot upside, because you can have like better tenants and you can charge the market rents. They're probably I would say $150 to maybe $200 lower than the market rents right now. So we can come in. Already came in. We are the owner now, and we have a great property management company called Chamberlain and Associates. They're well-known property management in Phoenix, third-generation management companies. They manage close to 10,000 units, and 6,000 of those are actually 10-mile radius from this property. So this property is like a bread and butter type of property for them. And in fact, they used to manage this deal before previous owner purchased 14, 15 years ago.
Mm-hmm.
Yeah, so we are in a good hand. We are in process of transforming the property. So we are just having a strict rule. We are process of implementing the renovation program, upgrade, interior upgrade program, so that we can attract better tenants. We can start charging the market rent $150 to $200 rent bump. So that's our business plan. We just wanted to make this probably this deal right now is location wise it's C plus ish, but in the near future it could be a B minus kind of locations, but the tenant base is still like C minus, I would say. So we want to reposition to C plus or B minus type of deal with the collaboration of the property management in local. And we will see in a few years if we're going to exit, or maybe, who knows, we might be able to, do the capital events, cash out. Same story as the Fort Worth deal, and they keep a little bit longer. Depends on the market cycles, and it depends on the market at the time in 2 to 3 years. So that's the business plan. Yeah, that's a business plan.
Very, very interesting. Yeah, I like that, man. So if this is a property that was more of a, there's definitely a lot of physical upside that could be done to the property, a lot of capex that you can put into the property, because like, as you said, the current owner, or the previous owner rather, did not put much capital into the property. And so they were just happy keeping it full and not doing much at all. Right. But the other thing, another reason for that is because there's a strong demand in the Phoenix market for workforce housing, and so if you have a solid property like this one that's well located, then you're going to have a strong demand, So everything that's coming up is all Class A. It could be A minus, but a lot of it is A plus, type of product that's coming out in the Phoenix market. So that's one of the things that makes this property attractive for qualified tenants, is that it's an affordable, within the range type of property, and it's not going to hurt their budget that much, right? It's not going to hurt their wallet that much. So So yeah, both from a physical standpoint, there's upside, but also from a management standpoint or operational standpoint, there's upside there, because if you're allowing just anybody to live on the property, then there's definitely an upside there that you can do. Better screening, better tenant retention on the ones that are good. I mean, just a lot of operational upside that you can do on that. So you did mention on the exit, that's something that you could do on exit, like similar to your previous or your current property that you have in DFW, to where you can do a refi maybe versus do a sale. So what would trigger that? I know you kind of mentioned the market, but what would trigger one versus the other, and why would you go that way?
Well, I think it depends on a lot of things, but one is cash flow. Right? If it's a cash flow deal and the people are looking for cash flow, then we want to keep it longer, right? Rather than sell and try to find the new deals. That's one, and of course the capital markets. If capital markets allows us to have better finance in place, or some sort of the supplemental loans to do the cash out, and if number makes sense, then that's going to be that route. And but I guess it depends on the market cycle, right? And then just compare with how much you can sell at this point, and how much you can how much will be the total returns versus if we cash out now, and what's the forecast for the market next 3 to 5 years, and what's going to be the appreciation we could expect. And we can probably develop the business plan all over again, right? What's going to be the capex we're going to reserve again, so that we can reposition again, right? From C plus, B minus to like a B plus deals or something like that. Do you have a capex to do that, or maybe rather want to sell it and then pursue to the different deals, a different asset class, maybe, because depends on the market cycle. If market is up and coming, and say developments of the multifamily is the way to go. Maybe it's rather to sell and start getting to the development side of the business or something like that, right? So there's a lot of factors involved, but basically at the time of the capital events or the exit, you just look at the market cycle, the financial options, and the total returns, and then intention. What's the purpose of having this deal, right? So I think those are 4 big things that I'll look at it.
Yeah, no, those are very good points, and I appreciate you sharing those, because I think there's a lot of people that whenever they look at a deal, they assume, okay, it's underwritten for 5 years, we're going to exit at that 5-year mark, or we're going to exit maybe a couple years before. Well, are you? Your plan is to do that, but are you? Will the market allow you to? Or maybe it's not. It's such a good idea to exit. Maybe you should just stay in the deal for longer. Maybe there's a lot of different factors, like you said. So it's a very good point that and very good, very important for you to find a deal that you're okay with staying in it for longer. And if you have a 10-year term, then hey, if we stay in the deal for 10 years, is it okay? Are we okay? And so that has a lot to do with it as well. If you're in a deal for 1 or 2 years and that's it, you don't want to be in it longer, then you're maybe playing with fire, because you can't control what's going to happen with the market 2 years from now. It's out of your hands at 100%.
Right. Yeah, absolutely.
Yeah. So in addition to to Phoenix and DFW, are there any other markets that you like? I know both of those markets, both of those states, for example, I know Texas and both Arizona, they're both landlord friendly, right? So they're both business friendly as well. What's the other criteria that you look for in markets when looking for new opportunities?
Oh, definitely fundamental of the economy, right? So they're gonna have a job growth, right, and followed by population growth. That's like investment 101 type of things. If there's a population growth, there's always demand for the housing, so there's a lot of supply, Class A supplies to catch up on the demands. But at the same time, the population growth is not only the Class A white collar people moving to the city. If white collar moving to the city, blue collar also moving to the city. They follow white collars because they're in the service industry, and they have new restaurants there. They might have new construction companies there. There's a lot of business just because of the white collar, Fortune 500 headquarters businesses. There's maybe hundreds of companies behind just one Fortune 500 companies. One of those, yeah. So
that's a very good. I mean, I don't want to interrupt here, but I am, I guess. But no, that's a very good point that you made. Because I never really heard it that way. To where you said that if you have white collar jobs that are moving in, the blue collar jobs kind of follow behind them. But not, you say it and it makes 100% sense. If you're having all these, white collar jobs, then what's going to happen? All these different, careers and service industries are going to start to pop up, and and those guys are going to need housing. So that's another aspect of of investment criteria. You have these jobs coming in, then all these other jobs are going to pop up, behind it as well. Very good point.
Absolutely. So for example, Toyota North America operation moved and consolidated into the North Dallas area, close to my house. North Plano, Frisco area, and they are planning to bring total of like 7,000 to 8,000 people, right? 7,000 to 8,000 people just for the Toyota office. But the economic analysis and all these, the industry experts saying that if they have like 10,000 white collar people, 40,000 more people move into the same locations.
Oh wow!
That's including the family members of the employees, and also the blue collar type of businesses.
Wow!
And also the subsidiary companies, service companies for the company. I mean, like there's a bunch of different companies that do the business with Toyota, right? They all want to move to the Toyota, close to the Toyota office. So yeah. Yeah, it just expands. So whenever you hear of like Apple moving into Austin, right? That's something that happened recently. They're bringing in, I don't know, I don't remember what the number was, but let's say 1,000 jobs, 1,000 white collar jobs or whatever, right? So in reality, the number is going to be multiplied sometimes more. Yeah, 3 to 5, because like 5,000 people maybe.
That's a very good point. That's definitely a nugget there to take away from in just listening to the podcast, listening to Yoshi. That very good point that we don't always think about. So whenever we're thinking about this many jobs are moving into the city, well, hey, it could be multiplied so many times over. Still. Because of all the other jobs that have to service those. Very good point, man. So I like that. So are there any lessons that you have learned throughout your career that you can share with us, Yoshi?
Yeah. So education is very important. That's gonna minimize the risk, right? There's always a risk, but you should take like a controlled risk, right? Not gamble for any business or any investments. So education is very important. Like that's what I did. I spent a lot of time and also the money educate myself before jumping to the multifamily businesses or the syndication business. So that's definitely very important. But don't be analysis paralysis type of things.
Analysis paralysis. That is paralysis. Yeah, that's a term that's given out there to people, I guess. Or I don't know if it's the people or the state, to where you keep on analyzing deals, and there's good deals that are popping up, and that are coming up to be numbers work out well, but you're still stuck on the decision making. Like, do I want to do this? Or it could be because of that. I don't want to do this because of that. Right. And you're making so many excuses into why you shouldn't do a deal versus reasons why you should.
Right. Yeah. So you educate yourself, and you understand probably 70-80% of the business. And that's the time you should jump on. Don't wait till 100% of the knowledge, right? So that like 70-80% for me, like 70-80% of if I see the vision, if I see the success, 70-80%, and I just gonna jump on, right? Jump into the whatever the opportunity that in front of me, and that's what I do. And that, so sometimes analysis paralysis, and you're afraid to jump in to the opportunity. You're going to miss the opportunity, right? So that you got to make massive action that points. So education and the massive action that points. Once you get the 70-80% of the knowledge level to get into the business.
And you'll figure out the other 20 to 30%. The other as you go in the mix. After you took action.
Right. Absolutely. And business is just as the only way to really learn the business is actually doing it, right? It's just reading the book, hearing somebody else's. You understand in the head, but you never understand in a reality. And you can only be able to understand and be better by just doing it, right? So you got to make a massive action at some point.
100% agree, man. You couldn't have said it better. So, Yoshi, it is time for our Nuggets of Wealth. These are questions that I ask every guest every week, and hopefully they are able to help them out. Question number one, what is a good tool, source, or platform that you use almost daily that can also help others?
Yeah, so this is not like a technology or software or anything like that, but that's what I do every day, right? Every morning to get me going for the rest of the day. So right after I wake up, I jump into the shower and take a cold shower, very cold shower. That's what I do every day, and that's gonna wake me up like better than Red Bull times 5, right?
Better than coffee.
Better than coffee. Better than Red Bull.
Yeah, for sure.
Better than my wife pissed off, whatever it is.
Wow. So cold all the way, like from the very beginning, or do you make it colder as you get to the end of the shower, or is it just straight up from the very beginning?
I want to warm up my body too, because that kind of follows to my next step. But so I warm up the body first, and then take a cold shower after. And then get out of the shower.
Oh, okay. So whenever you say warm up your body, what is it that you're doing exactly?
Oh, so just to take a hot shower first, and then just do the things. Wash body, brush teeth, wash my head, whatever, and then switch to the cold shower towards the end, and then take the cold shower for whatever as long as you want, right? And you get ready, you get out of the shower, and what I do is I stretch and meditate at the same time. So it's kind of like a yoga, but I develop my own stretch menu myself because I train kickboxing. So I developed the like exercise for my kickboxing exercise and kickboxing training. So I stretch, deep breath, just focus on my body, focus on my muscle, focus on my breath, just relax for like 10 minutes, right? 10-15 minutes. So that's my like the relaxing like meditation time in the morning. At that point, I'm like 99% ready, and then come downstairs, just have a quick coffee, and if it's sunny out, I always go outdoor for like 10 minutes, try to have a sunbathing, just look at the sun for like 10 minutes. That's gonna also even more wake up. The body's mechanism. If you see like sunrise, your body will wake up, right, naturally. So I use that. So I go out, and then it's good for the mentally too. It's just kind of refresh and kind of give me the energy. Just getting the sunshine, right? And I'm like that point, I'm like 100%, 120% ready for the day, and then just keep going till like go to bed, right?
Yeah, no, I like that, man. That's very interesting, and and thank you for like describing it, like actually describing like your steps that you do throughout the day. There's several different pieces that you do to it, but they all are very important to being productive and being focused, man. Because really, if you're not productive, you're not focused, then what are you doing? You have to be willing to take the action, like you said, you kept talking about earlier. Take those actions, and that's what prepares you for today, for the day. Now, what you do is it might be something different than what other people do, right? I mean, just because you do it doesn't work. May not mean that it'll work for somebody else. Yeah. But that's what works for you.
Yeah, absolutely. So I learned from a lot of motivational leaders like Tony Robbins. People like that, or some other guys, read the book or here at the podcast, and I combine all these elements together and develop my own like cycle or this platform, right, in the morning, like morning session for me, 30 minutes morning session. Yeah.
Got it. Yeah. Okay. Nice.
So
nice.
Exactly what you said. It's not like 100% what they say, but I take a lot of good stuff into.
You do it your way.
Yeah.
Yeah. So Yoshi, what was the best business advice you ever received?
Business advice I received, probably never give up. It's very simple, but once you give up, you get nothing, right? Zero. So you just, keep going, right? That's the life. Never stop learning, never doing things, never, pursue the dream or the goal or vision. Just don't give up. Once you stop, that's the end of your life, right? So, just never give up.
I love it.
Yeah.
What book are you currently reading, and which book has been the most powerful for you?
Yeah, so I read a lot of books. You can probably see back here, but
on YouTube. For those of you like that are watching this on YouTube, or those of you listening to the podcast, this the show is also on YouTube. So check out the YouTube channel as well. So you'll be able to see Yoshi and I.
Yeah.
So
I forgot about you on the podcast because I'm looking at the screen. But so I read a lot of Japanese books, a lot of business books, biographies of the business leaders, some of the spiritual too, because that's important to me, like, those 6 elements, like spiritual, business, career, health, family, fun, stuff like that. So all these 6 elements, I read a lot, just to improve myself in a spiritual part, business part, career part, health part. I read some like a health related books too. So I don't read as much English book, but the one English book that I really like is, of course, the Napoleon Hill's Think and Grow Rich, right? That's like very fundamental mindset type of book. So I really like that book. And I also read the Robert Kiyosaki, Rich and Poor Dad in Japanese, and he has like 10 books in Japanese. So all of his book, except one of his books, the Real Book of Real Estate, that's in English, but everything else was in Japanese actually.
Yeah, and this is a side point, but Robert Kiyosaki is actually Japanese as well, right? So
he's a 4th generation, yes.
Yeah, 4th generation. So I don't think he really, maybe he doesn't speak it well or fluently, but yeah, he is Japanese. So that's pretty cool fact there.
Yeah.
Okay. Where do you see your business in the next 5 years?
Yeah, so kind of the beginning of this podcast, I mentioned about this successful investor. He got into the resort developments, and that's actually my vision too. Like I said, I'm from Japan, and country of Japan. It's a beautiful country. If you haven't been there, you should be there. But it's a beautiful country. There's a lot of contents. Experts say there's like 5 to 10 times more contents than Thailand. But the people don't know about it because it's like best kept secret type of country. People don't go there any much. So now government is pushing for the tourism and hospitality business, but there are lack of resorts, hotels in Japan. People like us, if you have an international like vacations, exotic place like Japan, you want to stay in a nice place, right? But there's not much good hotels over there. Just a few American brands hotels there, but not much. Just a little bit of Hilton groups, not Marriott groups, and there's 1 or 2 Japanese group that has the luxury hotels, but there's not much. There's not enough. And there's a lot of good resorts, ski resorts, and very good places to visit, but there's no infrastructures. There's no resorts, hotels. There's no activities. There's nothing there. So I want to get into the resorts developments, redevelopments in Japan. I'm from Hokkaido. It's the north part of Japan. It's beautiful ski resorts. It's like a Whistler, Canada, or maybe like Park City or Denver, Colorado. That type of nice ski resorts, but not much people know about it. So that's kind of my vision, getting to the developments, probably create a funds for that and just do the redevelopments or developments. And few of my investor friends are already doing resort developments. So just wanted to do this syndication business, multifamily syndication business in a big scale. I want to have 10,000 units under my belt, and then just continue to grow, right? But at that point, I think I have a little bit more free time or a little bit of a flexibility to get into the different asset class investments, right? So that's why in 10 years, 5 years from now, I think it's very doable getting to those type of businesses, as well as, of course, continue to do multifamily. Who knows if we might have, I might have like 30, 50,000 units by then, right? But that's my kind of vision.
There you go. Yeah. I like it, man. You got to think big, and it's something that you like, that's something that motivated you, then you got to go after it, right? Don't put anything in front of it, and knock down those barriers that come across, right?
Yeah.
Okay. So at the end of your life, Yoshi, how do you want to be remembered?
This is a tough question, right? I want to contribute to the society. I want to contribute to the world. We try to make this world a little bit better and pass on to next generation, right? It could be the wealth. It could be something that I do. It could be like some sort of non-profit or donation type of charity things, good cause things. But I want to do something maybe hopefully in a multifamily space and results development space. So say for instance, if I do a lot of deals in Dallas, and this dude from Japan did a lot of things, and contribute to the local societies, local markets, create more jobs in local, gentrifying these spots of the Dallas. Used to be rough, but this guy buy up all these deals and make it better, type of things. That's how I want to remember. So this guy came in and did good things, and improve and pass on to the next generation. So that's
I like
something
it.
I want to be remembered.
Good. Yeah, great answer, man. I like it. Okay. Last but not least, Yoshi, where can Commit to Wealth Nation go to contact you and find out more about what you're doing? If they wanted to get a hold of you.
Oh, okay, yeah. Just email me, Yoshi Asano, YOSHI ASANO 777, just the number 777 at the gmail.com. So it's Yoshi Asano 777 at gmail.com. You can just email me, and then we go from there. We can talk about the business opportunities, or future deals, whatever, or any questions you might have, just let me know.
Okay. So that is Yoshi Asano 777 at gmail.com. I'll make sure to put that in the show notes as well. So that is it, Yoshi. I really do appreciate your time, man. Thank you so much for sharing a lot of your Dallas deals, what's going on in Dallas, your Phoenix deal that you have that you closed on recently. Everything about that as well, and also life lessons that you've learned, business lessons that you've learned, and future goals as well. All that is very informative and very valuable. Hopefully my audience also found it very valuable, but I appreciate your time, Yoshi, and I wish you continued success.
Well, thank you, Juan, for having me. Very enjoyed being on the show, and I want to come back at some point, talk about the progress of my, goal, and hopefully, we can do deals together for the next year too, as well. Yeah. So,
definitely.
Yeah,
definitely. I would love to have you on back, and just as I know, Yoshi's a great friend of mine. So I would really love to have him on. I'd love to have you back on. That's not even a question. So whenever you're ready, just reach out and we'll make it happen, man. So.
Okay.
CommitToWealth.com, creating a legacy by committing to real estate wealth.